Ever wondered what the interest equalization scheme is and why exporters are advocating for an increase in subsidy rates? Well, the Interest Equalization Scheme, or IES, is a financial tool designed to balance the playing field for exporters. By reducing the cost of credit, it allows exporters to stay competitive in the global market. Just recently, the scheme was extended until June 2024, offering a degree of stability for those who rely on it. The government even allocated additional funds to ensure the scheme's continuation. However, despite these positive steps, there was a sense of disappointment among exporters. Why, you ask? Well, it's because the subsidy rates under the IES remained unchanged. This static condition, amidst rising interest rates, has led to a call for an increase in subvention rates. While the additional funds were well received, exporters are now calling for an increase in subvention rates. So why are exporters advocating for an increase in subsidy rates? You may ask. It all begins with a struggle with rising interest rates on credit that has put exporters in a tight spot. They're seeking a lifeline, a higher subsidy under the Interest Equalization Scheme, or IES, to help them stay afloat. The Federation of Indian Export Organizations, or FIEO, is gearing up to knock on the doors of the Finance Ministry and the Commerce and Industry Ministry. They're making a fresh case, advocating for an increase in the subvention rates. For manufacturer MSMEs, they're suggesting a hike to 5%, and for others, a rise to 3%. But why this sudden plea, you wonder? The answer lies in the global headwinds that exporters have to navigate. These are not gentle breezes, but strong gusts that can blow any unprepared exporter off course. And then there's the repo rate, the rate at which the Reserve Bank of India lends money to commercial banks. It has seen a substantial increase of 250 basis points since May 2022. This increase has added more strain to the exporters, making their plea for a higher interest equalization rate even more urgent. The exporters' argument revolves around ensuring competitive trade finance rates to navigate the challenging global trade environment and inflationary pressures. Their plea is not just about numbers. It's about survival, competitiveness, and the desire to continue contributing to the economy amidst these challenging times. What does this all mean for the future of the export sector? Well, increased subvention rates could significantly enhance competitiveness in the global market. Coupled with the Reserve Bank of India's recent decision to hold the repo rate at 6.5%, the exporters' call for higher interest equalization rates gains solid ground. This could be the lifeline they need to navigate the stormy seas of global trade and inflationary pressures. The journey ahead for exporters is fraught with challenges, but with adequate support, they can continue to contribute significantly to the economy.